Governor, AFI's Deputy Executive Director, Deputy Governors, representatives of central banks, workshop participants, particularly those joining us on the second day, ladies and gentlemen, good morning and welcome to the second day of our FinTech workshop. A bit of housekeeping before we begin. For Wi-Fi service, the network name is Takamaka, and once you log in, please insert the password that is located on your table. For our international delegates, grateful if you could confirm your departure details with the secretariat in the flamboyant room just right outside the lobby. And as was the case yesterday, the workshop is being streamed live on the Central Bank of Seychelles YouTube channel. Today's discussions will be focusing on policy considerations and frameworks so as to ensure that we have sound policies and guidelines whilst embracing new opportunities that FinTech can bring. With that said, we encourage you to participate actively in the discussions. Our first panel will tackle the subject of innovative regulatory approaches for FinTech supervision and oversight. The focus of this session will be on the variety of instruments needed to achieve regulatory and supervisory objectives, as well as how regulators can identify which one is best suited. This session will also briefly highlight the elements of the Bali FinTech agenda developed by the IMF and the World Bank Group. Let us welcome Ms. Shamesta Apaya, the Senior Financial Sector Specialist from the World Bank Group, who will moderate this session.
Thank you, Cyril. Hi, can I invite my panelists to come on stage with me, please? Thank you. I know, what was that? Oh, we're missing a chair. We're missing a chair. So good morning and welcome to the first session of day 2. Hopefully you've enjoyed day 1, and so we've got quite an interesting set of panels for you today on basically on policy and the regulatory framework. To start off, I will first like to apologize again for having no women on my panel, something that I completely did not notice till it was actually pointed out to me, which is interesting in itself. I think I've met most of you yesterday, and for those who don't know me, I'm Shamesta Apaya from the World Bank. But previous to that, I used to be at the Bank of England. So regulation is something that's actually quite comfortable and quite common to me. And so we're going to talk today about FinTech and FinTech regulations and explore a little bit about what does good FinTech policy look like and what are the different instruments available to regulators. So let me introduce my panel first of all. First, we have Peter Munnings from Adara. He's our lone FinTech representative on the panel, but he's got a lot of experience with hard infrastructure the banks use, particularly working with experiments with the SARB and the MAS on their sort of RTGS work that they've been doing. He also has a lot of experience in, he's an early adopter of blockchain technology, and the firm particularly works on a blockchain-based liquidity management and international payments technology, which I will ask him to explain a little bit better when we come to him. Next to him, we have Arif, who is the head of the FinTech unit at the South African Reserve Bank. And they've been spearheading some very impressive innovations in the South African economy, which we'll hear about. Then we have Ken, who you all would have met yesterday. He's the Associate Director at the Dubai Financial Services Authority. And they've actually just started trailing an innovation testing license, which we will ask him to explain a little bit more about. Alain, most of you in the room might know already. He's the Director of Capital Markets and Collective Investment Schemes at the Financial Services Authority here in Seychelles. And they've been considering their own sandbox for crypto exchanges. Then we have Dr. Seto Mbetiku. Sorry. He's the Director and Head of Department of Payment Systems at the Central Bank of Ghana. And they recently passed a payments and settlement bill that's expected to have a very big impact on innovation. Before I go to my panelists and ask them to explain a bit more about what they're doing in their jurisdictions, to kick us off, I'm going to talk a little bit about the Bali FinTech agenda that we developed together with the IMF. So I think we realized at the bank and the IMF that FinTech is at the heart of the new economy. And while we now look at FinTech as something quite separate and disparate, we're soon going to move to a BAU model where FinTech is going to be embedded in every aspect of the work that we do. So the way we looked at the elements was to look at hard and soft architecture. So hard architecture meaning sort of the systems and the frameworks that you have in place, and soft is the more skills and the culture and sort of the tone from the top that comes out. So we pulled together the knowledge and understanding of both our organizations and came up with 12 elements. And the 12 elements particularly to look at to reflect both the opportunities and challenges that FinTech offers, and particularly as a result of what all of our member countries were asking us to do. So they were asking us about how they react to this new phenomenon of FinTech, and this is sort of what we produced to help us through that process. So just a note to say that this isn't meant to replace any of the standard setting bodies or any of the work that they do, but this is sort of a collation of information and sort of to bringing together of all the different aspects of FinTech and what FinTech might do to jurisdictions. So as you see on the screen here, there are 12 elements. We've separated them out into 4 main buckets. The first one being fostering an enabling environment to harness opportunities. The first element is just to be open and to recognize that there are many opportunities in the system, and it's much more about culture and tone, and also to prepare for the adoption of new skills and building the expertise in the environment. The second is the development of foundational infrastructure. So it's the digital ID work, the promoting digitization about across governments, encouraging the use of more efficient payment systems. So it's much more the infrastructure basis on top of which a number of these new products and apps will be built on top of. The third is to support competition and reinforce competition. So this includes areas such as APIs, reducing barriers, encouraging more players within the market, which again, in lots of contexts, expects that the older players and the incumbents will improve their offerings and their business models and what they offer to customers in that place. Fourth, within the fostering enabling environment bucket, we have promoting financial inclusion and developing financial markets. So this is a lot more about information exchanges, embedding FinTech into national financial inclusion strategies, understanding that innovations don't always have great advances in technology, but it's also how we use that technology. A great example of it is, again, what we saw with M-Pesa and the use of mobile telephoning. Next, we move on to strengthening the financial sector policy framework. Here we have three main elements, which I will go through briefly. One of them is improving and continuous monitoring. So as we know that FinTech there's a lot of movement in the market, things are developing really rapidly. It's the constant and continuous monitoring of what's happening in the market, so understanding the trends. A lot of this is about knowledge of the regulator, knowledge of the policymakers about what is happening in the market. Next is adapting the regulatory framework. So we obviously most jurisdictions already have a regulatory framework, but whether it's fit for purpose or not is the key element that this one is trying to bring out. It's to look at the cross-sectoral regulatory gaps. So, for example, with crypto assets, some jurisdictions have decided to prohibit it, some jurisdictions have decided to accept certain parts of it, and some have decided to regulate it. So it's understanding what your framework allows, and then looking at the gaps within that and developing that further. The next is modernizing the legal frameworks, which also includes to a part the AML and the CFT and integrity issues that might come with crypto and crypto regulations and assets and any other kinds of fintechs as well. Moving on to the third bucket, we have addressing the potential risks and improving the resilience. So here we have 3 elements that contribute to it. One being the SupTech and the RegTech tools we have. So how do we use not just innovation to enable the environment and the external focus, but how do we use it inward? how do we ourselves become a user of technology and improve the way that we function as a bank or as a ministry? So sort of the more nuances of that. Next, we go on to ensuring that the stability of the monetary and the financial system is maintained, even in light of all the new developments that we're seeing within fintech. So this goes back to the heart of what this conference is about, understanding the opportunities, but also noticing that the challenges are there. And finally, the last element within this section is developing a robust financial and data infrastructure. This includes areas such as data ownership, privacy, cybersecurity, and management of concentrated risk. And obviously, with fintech, a lot of the issues that rise up are also mainly from operational risks. So understanding that there are a lot of operational risks that are associated with it. And this area also goes to the heart of data management and data governance, and how do we react to all of that, and what do we do with it? And the last area is promoting international collaboration. So this is about how do we interact with other bodies within the same area. So it's other jurisdictions. What are they doing? How do we learn from them? How do we understand from them? So it's the promotion of the international collaboration, a lot of which again we're seeing here today. And the last one is the collective surveillance, and somewhere where the World Bank and the IMF also again can play a part. It's a collective surveillance and assisting member countries in areas such as capacity building and collaboration, again, with international players. Now, that's quite a whistle-stop tour of the Bali FinTech agenda. I'm happy to sort of talk to anyone during the breaks to go into a little bit more detail on each of them. And this slide, which is sort of it's sort of a one slide that gives you a flavor of what it is about, will be outside. So if anyone wants to pick up a copy, please do. So now I will go to my esteemed panelists and start. So Peter, maybe since you're sitting closest to me, I'll start with you. So if you can explain to us a little bit about what your firm does and the gap in the market that you were trying to fill when you developed that firm.
Great, thanks very much, and thank you very much for having me here. I know I'm the outsider, or one of the outsiders, as a non-regulator and as a non-bank. But we do work very closely with regulators and with banks, so really appreciate being here. So Adara is a startup. The average age of the founders is 46, I think. So Nick, I'm assuming if 38 is your average age, 43 is successful, 46 should be really, really successful, I'm hoping. But where Adara saw a gap is if we take payments are actually really easy. If you do a payment on a single ledger within a bank, what banks call on-us payments, they're really easy. They're easy to clear, they're easy to settle. It all happens instantaneously, there's no problem. It gets a little bit more tricky when you start doing a payment from one bank to another bank, because now the payment itself is easy. You can send the instruction across, you can route it through a bank serve, for example, for clearing. But the settlement will take place separately. So there'll be a separate settlement process through a settlement system from the clearing system. So the payment itself starts getting split up. When it comes to international payments, it gets even more tricky. So now, once again, the payment instruction is fairly easy to do. You can route it through SWIFT, it'll go through. But the settlement itself, so for those of you in the payments world, in the old payments world, the MT103 is the payment instruction. That's easy enough to track. And then you've got to now supply the liquidity for that. So you've got to do typically the MT202 cover, which will be routed through the correspondent network, and then finally the beneficiary bank will receive the notification from their correspondent that the money's arrived, and at that point they will then terminate the payment. So they'll possibly know about the payment hours, days before the money hits their account, and they normally will only terminate that payment once the money hits the account. So what we said is, we took a moonshot and we said, what if you could bundle all of that together and you could do a near real-time cleared and settled payment? And if you think about the Bitcoin network, which kind of hit the world in a couple of years ago, a Bitcoin payment can happen in near real time, and near is a variable word in that sense, but within a few minutes to maybe an hour or two, anywhere in the world. cleared and settled. The problem is with a Bitcoin payment that it's completely not compliant. It breaks all sorts of compliance laws. There's no FATF compliance. There's no sanction screening. No one really knows who the sender and the receiver are. So there's all sorts of compliance issues around that. So the challenge really is to say, could we make a near real-time payment, single payment object that is fully compliant with all of the compliance laws that are out there? And maybe another analogy, if you think about an email, you can send an email from yourself to anywhere in the world. That email will travel through multitudes of different networks. It connects, hops, jumps, gets routed. The key is that all of those networks are using a common protocol, and it's very easy for that email to go through all the different steps that it needs to go through. And to be fair, no one talks about a cross-border email. You know, I don't send an email to someone in the UK and I say, listen, I'm sending you a cross-border email. Maybe send them a WhatsApp to say, you know, your email will be arriving shortly. Which is, if you think about a payment, that's kind of what we do. We send the MT103, we say, listen, your payment is coming. It's a cross-border payment, so it's going to take a little while to get through. Because of various issues, compliance and liquidity being the two key ones there. So our vision and our dream was to say, let's build a series of networks, try and work really hard. So we're working with standards bodies, we're working with central banks, we're working with commercial banks, we're working with corporate treasurers to say, let's figure out a way that we can do real-time gross settled or cleared and settled payments that are fully compliant. And I think our dream, and it's not, we're not working alone, we're just working really hard on some elements of the technology. Our dream, like many others, is that when my children grow up and start doing payments internationally, they'll say, Dad, just remind me about the time when, you know, it took whatever to do a payment. I mean, or where you had to specify all of these details, you know, fill out 3 pages of forms in order to get a payment to get across a border. Because I think our dream, like many others, is to make payments really, really simple, increase the velocity of money, and open up the inclusiveness. Because for many people, part of the barrier to entry in terms of some of this is just the inability to fill out those 3 forms. They just don't have the details to do that. So that's basically Adara in a nutshell.
Thank you very much. That's very interesting. I was recently reading an article that said the email and the internet has made sort of information democratized, and Bitcoin and all of these networks are now making money democratized, and whether we're comfortable with that situation or not. Anyway, so I can't talk about policy frameworks without talking about sandboxes, so I might turn to Ken. And if you can give us a brief outline of what the Dubai Financial Services Authority is doing, and how you thought about the structures you used and why you've sort of settled on the sandbox, will be helpful.
Do we have the presentation? Just go one step forward. So just to put some context to this before I begin, the sandboxes are not all the same. There's a wide range of how these are structured. And on one end, they're an exemption. Jurisdictions say if you qualify for it, we exempt you from our regulation for a period of time, test what you need to. On the other end, all the regulations apply. If full licensing requirements, you have to meet them just like a conventional firm would, but we watch you very closely, we give you a contact. We're somewhere in the middle, and the way we ended up in the middle is we had to look at what's our objectives. Well, maintaining financial stability is our objective, maintaining transparency, fairness in the market, protecting the market's clients, and then we have the additional objective of protecting our reputation. Being a small jurisdiction, reputation is most of everything that we have. We can go to the next slide. And the questions we had to ask was, well, how can we support innovation? How can we maintain our regulatory objectives? And then how can we learn something through this process, which is what we were really trying to do with the sandbox. It's an opportunity for us to learn, one, can we regulate the fintech that's coming in properly? Is the technology something we understand well enough to regulate and supervise it? And does the fintech coming in, can they be supervised? Is this a technology, a service that can be properly supervised? How do we do that in an environment where we learn, they learn, we maintain our objectives, and we also prevent them from getting a competitive advantage, and we don't compromise on our regulatory requirements? So that led us to what we call the innovation testing license. Now, from the beginning, we hated the term sandbox because it sounded just too informal. It sounded too much like playing around in a market, not a proper thing for a regulator to be supporting. We use the term now because globally in the industry, it's the only thing people seem to understand. But we like to stick with innovation testing. It's the Innovation Testing License Program. And the reason it's a program, because we didn't create actually a new license. We use our existing licensing regime. We didn't change anything about that. If you come to us with a new innovative way of delivering a service, you have to determine what that service is and fit it into one of our existing licenses. So we would give you the license, and by doing that, all the regulatory requirements still apply. And if you look at this in the terms of the first, second, and third line of defense, what we determined was, we said, well, the first line of defense is still going to apply. You still have to protect your client. You still have to maintain the integrity of the marketplace. You still have to deal fairly, do all the things we'd expect. Where we said we can give some flexibility, and this is the benefit of the testing license program, the way you go about making sure you meet those requirements. So what's difficult for fintech? We have to ask the question. What makes it difficult for them to become a regulated financial institution? Well, it's the cost. And what's the cost? You have to hire an independent compliance officer. You need a risk officer. You have to create a risk management program and operate that program. You need a compliance monitoring program. You need an internal auditor. You need an external financial auditor. And we looked at all these things, and what's the purpose of them? Well, it's to make sure they meet the requirements. And that's the real cost. So is there a way we can loosen up the requirements to have that second line of defense? We said, well, we think there is a way we can do it. We won't make them get a compliance officer. And it is a typical 2 men in a laptop, 2 people in a laptop. The money is getting these additional players into the business. So if we loosen that up, what then do we need to think about? What's the real concern? Well, we have to worry about the impact of the market if something goes wrong. We don't want to unleash this fintech on the marketplace if something go wrong, and then everybody looks at it and says, well, of course it went wrong. They didn't have a risk manager watching what they were doing. They didn't have a compliance officer making sure that they were actually dealing fairly with their clients. So we had to control the impact of the outcome. So to balance it, and this is the cost to getting this flexibility, we said we'll restrict very heavily what they do. So we'll limit them to a number of clients they can deal with. We'll limit to the amount of money they can deal with. So for example, a robo-advisor, we had come through, we said to them, you can deal with 10 clients, you can take $10,000 from each of those clients. Go through, onboard those clients. Once we've tested your onboarding processes, we're comfortable that you've onboarded them properly, we're comfortable that you can do some transaction monitoring around that, then we'll let you do 10 more clients. So they came to us after doing the 10, they asked to do the 10 more, we checked their files, we were okay, we let them do that. Once they got to 20 clients, they then came to us and said, we've identified a compliance officer. The compliance officer came in, we met with them, it was a third-party vendor, so we already knew them, we were comfortable with them. They laid out the compliance monitoring program they put in place. He said, okay, now you can go to 50 clients. You could take $20,000 per client. And we kept ratcheting up over the 12-month period so that by the end of the 12 months, they had met all the requirements they would otherwise have had to meet if they had come in through a conventional licensing program. So it's not, it's sort of we're right in the middle. We don't exempt the rules. We give some flexibility in the rules, and we don't require everything to be in place all the time, right from the beginning. We give flexibility, and we monitor them very closely, and effectively we give them 12 months to meet the licensing requirements, is what's happening. And in a sense, it's a bit of a better program than the conventional, because by the end of the 12 months, we've actually had a chance to test the effectiveness of their controls, where otherwise with a conventional license, an institution shows us they have the individuals in place. We meet them, we vet them to their fitness and propriety. We look through their program, they say they have a proper compliance and risk program in place, but we never get to test the effectiveness. We then give them a license and say, go out and do your business. With this program, as they show us they have the programs, we get to test it a little bit. So they build up their program, they build up their business. By the end of the 12 months, they're ready to be licensed. And as I mentioned yesterday, we've only had 2 firms in the program. Of those 2, so far only 1 has exited the program. And it's a bit of a success for us, we say, because that one firm, I explained this very smoothly, and it sounds like we did this, we thought this out very carefully in the beginning, and I tell the story now. It didn't go so smoothly when we did it. The honest truth, the way this came about was Dubai had an innovation strategy. This was 2 years ago. We needed to support the strategy. And the question was, how do we support the strategy? Well, other jurisdictions have a sandbox. Why don't we get one of those things? So we developed a sandbox. Fortunately, we have a very conservative legal team, a very conservative executive that said, we really don't like this idea. So we didn't give a lot of flexibility. They said, we're not changing our rules for fintechs to come in. We're not going to have people playing around in sand. This isn't going to work for us. So the compromise internally was this program, which in the end, I think we got a little bit lucky. It worked out. And over the last 2 years, we spent a lot of time asking that question. What was the objective of this? What were we actually trying to get? What should we have been actually asking? And midway through, it was about last May when we actually started asking that question. What's the objective of this thing? Why did we do it? And the answer at the time was, well, we needed to do it. But then we had to sit down very seriously and think, what are the objectives? And And as we look through it, then we structured this. Now we've written policies, procedures, we've documented this very well. So this is the program, this is the outcome. The way we got to it, it took about 2 years to actually get to making it very clear that this was the appropriate outcome that we needed. And it's a good thing we only had 2 go through the program for that very reason. We're very comfortable with the firm that exited because we did put them through a lot of paces. Toward the latter half of their terms of the testing is when we started to really ask these questions and really understood what we needed them to do and where we needed them to be in what position before we could give them a license. And when they came out, we got very good feedback from them. They did actually appreciate this stepped approach. A little bit of business, build a little bit of the program. A little bit more business, build a little more compliance and risk management. A little more business, and so forth, till we got to the end. Things that we've learned through the program, most of what I just mentioned, we learned that we could have put a little more thought into the beginning, and it does require a bit more thought. You don't just start a sandbox and do it. There are a lot more solutions than problems out there, and a lot of that was talked about yesterday. And that's a lot of the reason why only two firms have come through, have actually gotten licenses out of the 150 or so that we've talked to for this specific program. A lot of them really didn't have a needed solution. And part of the success is through talking with us and us facilitating conversations with industry. They learned that there wasn't really much of a market for what they were wanting to do. And then we learned a lot about our own understanding. We understand we didn't quite know everything we thought we knew about distributed ledger and some of the digital technologies that are coming in through these programs. A lot of jurisdictions have put out policy papers that if it looks like a security, it's a security. And through engaging with some of the firms who want to come in this program, we've learned a bit more about it's not quite always the case. There are some additional issues, and we can use this program to sort those out. And we can do it in a way that controls impact on the market. Can't do a tremendous amount about the probability of frequency of issues going wrong. That's the nature of innovation, but we can control the impact if something does go wrong. So happy to chat with anybody offline about it. There's a lot more details that goes into these programs, but at a high level, this is how it works.
Thank you very much for that, Ken. I was wondering if I could ask you a follow-up question. So you obviously said with the eligibility criteria, you only picked certain firms, and about 150 sort of approached you, but you only picked about 2 to actually go into the process. Maybe, can you talk a little bit about the eligibility of that? And just to add to that as well, as a result of the firms that came to you, so seeing the different business models that you saw, was there any regulatory change that you felt needed to take place within the environment?
So the criteria to enter the program, 1, you have to be a financial service. 2, you have to be ready to actually operate. 3, you have to be ready, you have to be intending to continue to operate in our jurisdiction once you've gone through the program. We don't want to just be a testing lab. The 4th one is you have to be innovative. That one's the tricky one. What's innovative, and how long does something remain innovative? We've had a robo-advisor go through the program. The next robo-advisor that comes to us, do we consider them innovative? Don't have the answer for that right now. That's a continuing debate that we have going on. Some of the regulatory changes that have come out of this, crowdfunding. We had a bit of a flurry of crowdfunders wanting to come to us early on. And for a variety of reasons, not all of them continued. We do have one property crowdfunder in the program now. They're in there because we don't have rules just yet for property. Property is a bit of a tricky area. With this program, we created loan and equity crowdfunding rules. So since we've done that, we've now effectively carved out crowdfunding from the program. Unless somebody comes to us with some novel new idea, way of tokenizing or digitizing somehow or another crowdfunding activities, we've created separate regimes. And those regimes came out because of the crowdfunders that came to us that wanted to come through this program. Right now, we're also looking at digital assets. So we do have 2 firms that we're entering into the program now. We've given them provisional licenses. They should be licensed by the summertime, by midsummer. And one of them is looking to digitize Sukuk offerings. The other wants to tokenize securities offerings. So those 2 firms we are using as a testing ground for a digital assets regime that we're currently working on. So it should be, by the end of the year, there should be something published that you'll be able to see, the consultation paper on digital assets that's a result of this program.
Great, thank you very much. Alan, if we could move to you now. So I understand the FSA has been thinking about whether they need to set up a sandbox themselves. So if you explain to us a little bit the thinking behind that and why you arrived at that conclusion, that would be good.
Good morning, everyone. Thank you for the question. So basically, what brought up about the idea of us coming out with a sandbox was was a few different reasons, right? One is that at current, the Seychelles has a number of offshore structures that could possibly be engaged in business activities that are fintech related, but not in a regulated space. Now, the idea was that we would create a sandbox and pull these entities that are under the purview of the FSA. These are entities that are registered with the FSA. So pull them out of the darkness and into the light, basically. Another objective was to, at current, within the FSA, the institutional knowledge about fintech in general is relatively low. We are building capacity, and we felt that having a sandbox would allow us to learn in parallel with the business that are currently in the sandbox. It would give us an opportunity to develop our internal capacity, and also to put in place appropriate regulatory frameworks. I mean, at current, we've had approaches from several businesses where they cannot be fit in one of the frameworks that we have under our purview. So, round peg, trying to fit the round peg in a square hole. So we feel that the sandbox, through this learning process, would allow us the opportunity to come up with appropriate regulatory framework to fit these businesses. And I think the third objective is to have better financial integrity in the financial system that we regulate. We feel that having improved regulation in coming up with regulation that is relevant would improve the integrity of the financial system that we have under our purview. Yeah.
Great, thank you very much. So it sounds like the approach that you're taking is much more sort of the Singapore MAS approach, which is, does anything fall outside of the regulatory framework, which is quite different to, I guess, the UK FCA approach, which is most things are within the framework, they just want to increase competition in the marketplace. So it's sort of slightly different and varying objectives.
Right.
Arif, if I turn to you now. So maybe tell us a little bit about what South Africa has done in the space of fintech. And I wanted to ask you to expand a little bit on the IFWG, the Intergovernmental Working Group, which I think is a great example of how different government bodies have actually ended up working together to sort of come together to create sort of a common understanding on how to react to fintech.
I've practiced a little, Nick. I think it's bonjour. Did I get it right? Bonjour. No, but I also thought that there was a particular thread from yesterday's dialogue that was quite important to carry on with today. So for all those Spurs supporters in the house, I thought it was a phenomenal comeback. Let me be naughty, Shamista. I'm going to just answer your question in a roundabout way.
Absolutely.
But I'm going to put the audience on the spot. I know you asked for a bit of disruption. Now can you imagine a central bank being disruptive? Here we go. So I'm going to put the audience on the spot. How many of you think, as you've heard the dialogues from yesterday, that fintech is a fad? It's going to go away. It's a fad.
Nobody?
Yeah? How many of you, just by hand? It'll go away. It's just innovation that's always been there. I need at least one hand. Doug? The phenomenon. One hand from BankServe, I think it is. Can I put you on the spot? Just tell me why you think it's a fad and it'll go away.
Regretting you raised your hand now, huh?
Just shout. Why do you think? just another technology that's going to be used in financial services. That gentleman should be our governor. These are the typical arguments that we had to face, Shamista, inside the bank when we said to governors we want to focus in on fintech. And their core argument was, hold on, this is just innovation. It's just technology being applied exactly as captured by the gentleman on financial services. And there's nothing different. Our regulatory frameworks have been there. If you think about the underlying services that you see, the economic functions, the activities, you bear with me that it is still payments related, it is still investments related, it is still insurance related, it is still lending related, and it's still about money, right? So what's different? And regrettably, we took a different stance and challenged governors on their thinking and said the following, and it's probably come out in some dialogue over the last day and a bit. We said, well, we want to be clear about what we mean by fintech and why we think it's not a fad and why we think it's important. So the first thing we had to do was define what it's not. And we said, fintech is not equal to the firms, the startups. It's not Luno, Jumo, Adara. Okay, that's not what we're talking about. We also said to them that fintech is not technology. So it's not AI, it's not blockchain, it's not cloud computing. Those are the technologies. We defined it very specifically and we said fintech is technology-inspired innovation, still fine. In financial services, still fine. That may lead to new business models, new products, new services, and I'm just going to add on my own bit that says that we have never seen before. And if you sit back and you ask, so give me some examples of that, man, you can now move money in the message through crypto assets. We've never seen that before, okay? You now have new payments platforms that are different from what I call the big five. Card, debit orders, EFT credits, faster payments. These are different platforms that are now being produced, okay? Separate from the normal intermediaries that normally produce them. I've forgotten my set of thoughts. Let me just catch up. So it's technology-inspired innovation that certainly produces new services. And we said to them, look, sorry, the thoughts come back. So if I just picked on those two, one was making new money, the second was payments platforms. What about online peer-to-peer lending platforms? Very different from intermediaries that we used to providing credit lending. Similarly with peer-to-peer insurance and similarly with robo-advice. So we look at these things and we say, hold on a minute, these are new innovations that we've never seen before, and therefore we've got to apply our minds to it. So I'll pick two that we decided to explore as this intergovernmental fintech.
So I might interrupt you at that phase.
Am I going on too long?
No, and actually ask the rest of the panel whether they do think that this time is different, or whether you think that this is just an extension of the same. And we'll start.
Seto's going to challenge.
To Seto at this point.
Already, I think at this point I would disagree with my very old friend. Ghana happened to be a participant of the April 2018 consultative seminar before this Bali, IMF World Bank Bali elements was drafted. And let me say that the topic for discussion today is what are the various regulatory approaches to promote fintech? The difference is that in the past, central banks don't license non-banks. In the past, that is the difference. Let me define that. Central banks don't license non-banks. In most jurisdictions, there are some few jurisdictions that were licensing non-banks. But what has changed? We have seen that as a result of technological changes, innovation, complexity, payments going online, cybersecurity, data protection, AML issues, central banks have woken up and said that, look, let's look at the activities of non-banks, which fintech falls under. I think yesterday we all agreed on the definitional issue of fintech. Any technology that is facilitating transfer of funds or whatever. I think that's what we all agreed yesterday. So now the question is, as a central bank, are you interested in a technology? For example, a paper just came out 2 days ago, issued by the IMF, that showed that in Latin America, the cost of remittance is 6%. However, leveraging on fintech can reduce this cost dramatically. And the question is the central bank interested? That is one. Now, if you come to Ghana, in the case of Ghana, we had advantage, as I said earlier on, to be part of the IMF consultative framework before these 12 elements were developed by the IMF World Bank at the Bali meetings last year. So what we did was, we realized that our current regulatory frameworks are not sufficient to promote fintech after our review, just like the presentation that was done on by my friend from the Financial Inclusion Department or Division. You do a review of your systems, just like Seychelles now. What they need to do is to look at their laws. The current laws, does it promote financial technology firms? If they don't promote it, then you come out a review and come out with what are some of the things you need to do to change your laws. And let me add that I would advise the Bank of Seychelles not to rush. As a central bank, we are a little bit conservative. Especially in this country, we have only 95,000 people. So if you get it wrong, you'll be in trouble. You need to review your laws, see where the gaps are. For example, in the case of Ghana, we review our laws. The Parliament just passed a new Payment System and Services Act, which is going to license fintech. And let me say that another thing that we need to highlight so far in this discussion is, when we say fintech, there are classes of fintechs. There are different sizes of fintech. And as a central bank, you should be aware in your economy the various classes of fintech you have. We have very large, medium, small, and some cannot even meet regulatory requirements, as my colleague have stated, with terms of sandboxes that you have to come up with. So you don't put sandboxes first before reviewing your regulatory framework. So I would definitely disagree with you to say that fintech will vanish. The reason is, in Ghana, currently our remittances, there is a strong collaboration between fintechs and the banks. And remittances are terminating on mobile. And that is reducing cost of remittances. So yesterday, my governor sent me that paper that the IMF released. And I said, well, we have taken the lead. In the past, remittances have to be collected at over the counter. And it was associated with fraud. Now, I can be here and receive my remittances. Is the central bank interested? That is the issue. So, yes, people may think that when we talk about financial technology firms, they have been there. Yes, they were large ones. But now, we have very small ones that are also transferring payments that are bringing risk to an economy. And the issue of AML is a very serious thing. One firm creating a problem for a country, it can lead to de-risking. So as a central bank, from me coming from, actually that advantage I have worked in several departments, monetary policy, all over the places. So I don't think fintech is going to go away. And we have deeply, and I agree with the IMF and the World Bank for taking that lead to come out with those elements. And I would advise Bank of Seychelles that elements of Bali Accord provide a good framework as a starting point. If you study carefully, we have even incorporated in our payment system strategy that will be launched in June, because we had a head start of what was coming out. So it is not something, if you dismiss it, you dismiss it at your peril.
Thank you. That was very interesting. And I actually think you're agreeing. I think Arif is also saying that fintech is important.
I think we're in agreement. I think
the
important bit is not to see it as just any other innovation.
Yep.
You know, not just debit cards and credit cards and ATM by current intermediaries. And I think you know, very briefly, you asked about the Intergovernmental FinTech Working Group. So it's a working group that we put together in 2016 in South Africa. It's made up of a number of different regulators, very similar to the regulators that you see on the chart there. So it includes the National Treasury, it includes the Financial Intelligence Center to deal with AML matters and so on. It includes SARS, the tax people. It includes the Conduct Authority, and of course it includes the central bank. Now, the key question that you're asking is, why do that? Why put together such a body? They've always existed, but why come together? And I think back to Seto's excellent points, you know, that this time is different, that it challenges fintech innovation, challenges the regulatory frameworks. And that's not a bad thing. It must challenge the regulatory frameworks. I'd probably conclude by saying, you know, if I just take South Africa as an example, you know, there's lots of financial services that have been offered over many years. But I tell you, there are a lot of people in South Africa, millions of people that are underserved and non-served. In fact, I'll just use one example. You know, I was sharing with Ken yesterday. We speak to some of the people from the lower LSMs, and some of them have 5 funeral policies. And you have to ask why. Why is that the case? Why do people take out loans and pay such huge interest rates? Fintech can make a difference. I think the only caution is that we must make sure as regulators that it's level playing fields. We promote fintech, but there's no regulatory arbitrage. I'll pause there.
Ken, do you want to come in there?
Yeah, just to add a comment onto that. What's different, I mean, technology, innovation, that's been happening since the beginning of time. That's how we are where we are right now, and that's going to continue to happen. What's different is my grandmother lived through the Great Depression. Her mattress was the safest place to put her cash. For me, the bank was the safest place to put my cash. My daughter, the safest place is going to be Google or Apple. And pretty soon it's going to be Facebook. So from regulators, we have to look at this a little bit differently, because the innovators are not the banks that are coming to us with these new innovations when we're regulated. They're not even financial institutions. These are people who are operating in the data space. It's an entirely different world. And their products are going to be adopted very quickly and very easily. So from a fairness, protecting customers, we have a bit more of an obligation now, I think, and something to be a bit more concerned about than we did when banks were coming up with innovations. Yes, credit card was a new thing, but it was being invented by a bank who already understood regulation. They already had certain obligations to their clients. Facebook, and we've seen what Facebook does, not to pick on that one specifically, but they're in a different world. Now they want to get into our world. They want to get in the bank's world, and that's what's different now. Is that going to change? Is there going to be a new player 10 years from now? I don't know, but that's a significant difference. It's the participants, and it's the adoption by the population that we need to be worried about.
Alan.
Yeah. I would tend to agree with Arif and Ken, but I think also on a higher level, I think it's the first time in the sense that now there is wider recognition by not only the business community, but also by policymakers, standard setting agencies, consumers, that the emerging technologies can bring widespread, meaningful change to the way we do financial services, and I think this is important. It's the conversations. I mean, you go out on the street. Now you have a layperson talking about fintech, but you also have the conversation higher within governments or within global standard setting agencies, and I think this is the difference now.
That's very interesting. It's also interesting to see that there's lots of other players entering, obviously, this space, and there's a bigger question about should they be regulated or should they not? So when I was at the Bank of England, one of the big questions that we were asking ourselves was, should we regulate or should we start bringing the technology firms into the remit, because they are now big financial market infrastructure players, and they're obviously dealing with finance, and there's consumer protection issues, there's stability issues that deal with it. Setar, if I turn to you, and you mentioned the license that you have just recently created. If you can explain us a little bit more about what that license is, and you also said that there are variations in what types of fintechs there are, and it sounded like you were segregating them based on size. So that's also, if you can explain why it's based on size and not on, say, business model, that would be interesting.
Yeah, thank you. I was using the size just to explain that when we talk about fintech, we don't need to group all of them together as if they are one entity. There are different classes of fintech. However, in Ghana, we are regulating them based on their operations. Mm-hmm. And automatically, the operations come with various levels of resources they need to carry out those operations. Because, for example, if you take a fintech currently partnering Barclays Bank for remittances into Ghana, it's a very big fintech. You cannot compare it with a startup, which may not have the necessary resources or meet the necessary requirement. That explains why we are coming out with sandboxes. Sandboxes, not regulation, should not stifle innovation. And we realize that after passing the act, there is a class of fintech that will be disadvantaged. And that is why Ghana, I've just submitted the draft sandboxes regulation to my management for a review. Now, what we did is that we have various classes of fintech based on their levels of operation, and that is also going to define the level of capital. They will post capital, the level of capital they will post. Some don't have capital at all, but we cannot leave them. Then we come out with sandboxes. Sandboxes, a framework to help those who could not meet the regulation, and then we see how the central bank can support them, and then bring in investors, if possible, who can support them. Because what we saw is that in the past, we have this fintech that approach the central bank, that they have these good ideas. They get to the bank. Something happened a year ago. They went to one of the international banks, two gentlemen, with a very brilliant idea. They went to one of the international banks to partner them to come up with this innovation. A month later, could you believe that the international bank brought the same proposal to central bank for approval? And up to now, these gentlemen, their proprietary right is lost. And these are the people we want to promote. And it's also creating job. Okay? So we are regulating fintech, one, because of cybersecurity. Yesterday it was highlighted. Currently, I believe Bank of Seychelles also is in the Association of Africa Central Bank. Last year, we proposed that every country should come out with a cybersecurity directive because of what is happening now. So that to ensure that all the innovations you are promoting, you are safe online. Okay? So countries have started drafting their cybersecurity directive. Ghana, we just passed our cybersecurity regulation last year, October. So all licensed fintech have to conform to these requirements. AML. These days, if you are labeled as a money laundering country, you know the impact to your economy. So we are interested in our fintechs meeting AML CFT regulations. Data protection. People need to have trust in the new technologies. If I transfer $100 to my wife only to see it on social media, will I use that framework again? No. The central bank should be concerned. Systems and controls. There might be institutional systems to ensure that operations are safe. Yesterday, one of the panelists asked a question which was not discussed a bit. Do fintech need boards? Yes, but it's the size. There might be appropriate governance. The central bank should be concerned of appropriate governance. And yesterday also, somebody raised a question. If it happened, you have allowed a fintech to operate. They have onboarded customers, all of a sudden they vanish. Yesterday discussion. Central bank should be concerned, especially in the case of Seychelles, 95,000. There will be mass demonstration on the street. It's unlike Ghana where we have about over 35 million, even my colleagues from Bangladesh who are in 100 million plus. Theirs could be managed. But in terms of Seychelles, I could recollect the whole week or months, there will be no work going on. So you must be concerned. As a central bank governor, you must be concerned. So you don't just say that innovations are coming and you are just going to copy. And that is one advice I want to give. Do come out with your own system, your own regulation, your own distance. No regulation, my regulation will not be appropriate for Seychelles. South Africa systems will not be appropriate for Seychelles. You know your system, draft your own system, and then just listen to best practices and come up with your own system. and you evolve your own system in your unique way. So these are the terms that I would say that Seychelles, Bank of Seychelles, it's a very good opportunity granted us. Initially, as you have said, I thank Bank of Seychelles and the AFI and then the World Bank for bringing me to come and share my ideas to this. I happen to be leading payment evolution in Bank of Ghana, and if you look at the Global Feeders report, which Ghana is, even though we are not started as Kenya, in terms of, we started from 2015, there will be a big change because we have our own way of doing things. We don't copy any country and never copy any country because Seychelles has its own problems, which is different for Ghana. That is the advice I will give. Thank you.
Thank you. I think it's very important to set objectives, to have very clear, to actually have a focus point and know the problem that we're solving for the country and to be specific, but to also learn from what's happening internationally and sort of lessons learned. People have sort of tried things and failed, and to understand what's worked and what's not worked. Peter, if I turn to you now, if you can tell us a little bit about what was your interaction with the regulator when you were trying to start up this company, and what was useful for you and not so useful?
So our experience has been the regulators in general have been actually really, really easy to engage with. And I think partly because of our mindset and our attitude.
Sorry, can I ask, are you regulated in South Africa?
So we are incorporated in London, but we have done a project with the Saab. So we had a long engagement with them around that. And then obviously previously worked with the MAS, and I reminded myself, we actually did a proposal to the DIFC as well a few years ago. So I think my perspective on the sandbox is probably shared by a couple of people. For me, a sandbox has a bad connotation because it implies as a fintech you can get away with a whole lot of things that normal companies can't get away with. I think, so let me say that for me, specifically with the Saab, the key thing has been the dedicated fintech team, which are like a portal into the rest of the bank. Ken said yesterday, a lot of people come in, one, they don't know what the regulation is, and it's true. And so the fintechs need to be told, because sometimes their assumption is there's a whole lot of bad regulation out there which we could never adhere to. But actually, it's not true. There's a lot of actually really, really good regulation, and oftentimes fintechs or startups can actually adhere to a bunch of that regulation. So one is to just have someone explain, this is how it works, this is the regulation. And then he said something else interesting is, many times these startups don't even understand their own markets. And I think the regulator's in a very privileged position of knowing what the incumbents do, knowing what, they've dealt with all the bad stuff, that's why they have the regulations in place. They have a very good broad overview of what the market looks like, and they can help startups kind of address the right problems, if that makes sense. So I think the regulators, instead of running sandboxes, should run like Britain's Got Talent or something. So there should be, you should go in, there should be the Simon Cowell guy and all the others. And you put your proposal and you either get the buzzer to go off, or in a nice way be told, listen, what you're proposing is just a bunch of nonsense, it's already been done by these people. You don't understand, France mentioned the whole, how are you going to operate this thing? So yes, you've got a great idea, but how are you going to operate it? Have you thought about what happens if something goes wrong? Have you thought about if your servers go down? Have you thought about the fact that you're going to be handling people's money? And you can't just, we'll restart the servers. You just don't have those options. So I think those are the kind of things just that the regulator can help. And then I think one of the key things is because, so I'm in both worlds. There was a Ethereum hackathon 2 weeks ago in Cape Town, 350 Ethereum developers, massive energy, huge talent, great ideas, but to be honest, a little bit unfocused, all over the place. And for me, that's why Britain's Got Talent's a great example, because these guys come in, they're all over the place. Some are doing this, some are doing this, and you need a Simon Cowell. So if you think of One Direction, he just said, you're okay on your own, and you're okay on your own, and you're okay on your own. But what if we got these 5 guys together, and you stopped singing these kind of songs and started singing these kind of songs? I'm using a completely different analogy just to try and make a point. We could come up with an amazing band, and then he obviously gets behind them and helps them with the regulation of the music industry, but I think you could do the same in these contexts. So there's this massive talent that's very shotgun approach, try everything, do everything. But some of those ideas are amazing, and they just need to be a little bit channeled and pointed in the right direction, and just shown, actually, this is the regulation, this is how it works. If you were to partner like this, you would comply. And then you don't have to have a sandbox. You don't have to have regulatory relaxation. You don't have to have anything funky. You just say, this is the policy that you need to work under, and it's quite a big open area, and go for it. So there was one other thing. You mentioned the fact that, so I think traditionally we've had a very stable financial sector. You've had banks, insurance companies, central banks, and asset managers, effectively. So, and the regulators are kind of geared around those, and then kind of financial market infrastructure players like clearinghouses. And the regulators are definitely shaped around a very formal structure. And our innovation, as we heard yesterday, the first ATM, was developed by a bank. The first card was developed by a bank. So and I was saying to Arif, it's not just the card. The card is, it's the card, it's the POS devices, it's the infrastructure around that, it's setting the interchange fee. There's a lot of stuff that needed to happen for that to happen. Nowadays, you have a huge amount of access and access to clients and access to applications directly on your phone. So the customer's been brought much closer to the tech firms, which I think is partly why it's exploded. And you've got non-banks and non-insurance companies and non-asset managers who are now providing financial services. And the question really, I suppose, is, especially for the sandbox, let's call them, I can't remember what your term was, the innovation testing license. That should be focused on these non-traditional players to say, how can we help you take your brilliant ideas, which is potentially going to help financial inclusion, all of these things, reduce the cost of payments, and funnel it correctly towards a real business that will be well operated, that will be well managed from a risk and compliance perspective.
So that's interesting. So you think that the regulators have a role not just to help you with the regulation, but also as a role for knowledge exchange and support the development of these ideas and products that might be solving sort of particular problems within the industry itself.
100%. As a startup, you have a certain perspective of how things happen. You've done something, you've seen a problem. I think Nick mentioned it yesterday. A lot of the startups have tried to do something, try to do an international payment, try to invest in a stock exchange that's not in their jurisdiction, or whatever it is, and or try to raise funds, and they think, this is really hard, I'm going to try something different. The regulator has a completely different perspective. They're on the other side of the business, and they can say, okay, I understand what you're saying, but these are probably some of the reasons, and if you did it in a little bit of a different way, or if you tried this, or there's a perspective I think that they can bring that is completely different to what most startups have experienced, because there's lots of, for example, we've discovered the regulator actually has maybe in some cases, well, definitely in some cases has less requirements from a risk and compliance perspective than the banks are putting in place. And that's not necessarily because the banks want to be harder on themselves than the regulators being on them. It's just because when they wrote the systems, that's how they were, and they're legacy, and it's very difficult to change them. So, for example, there's now multiple layers of KYC compliance. You don't have to be fully KYC compliant in order to do a transaction. You can have a lesser KYC compliance. But the bank systems were written for the full KYC compliance, and therefore that's all they can do. And then you've got other players who come in and say, well, hey, we're agile, we can quickly do this change. We'll allow you to do up to 3,000 Rand a day, for example. Transactions, I think it's 10,000 Rand a month on a lesser KYC requirement. And suddenly they're picking up a whole piece of that market, which the banks could do from a regulatory perspective, but don't, because their systems aren't catered for that, let's say. Not so much their IT systems, it's the whole infrastructure. So yes, I think the regulator could say, listen, this is the regulation, this is actually what we're doing. This is what we're trying to do. So a good point, no country wants to be labeled as a conduit for money laundering. No country wants to be labeled as a conduit for financing of terrorism. Those are simple policies. They're red lines. You cannot cross them. But I'm pretty sure no startup wants to enable money laundering or financing of terrorism. Or, I mean, maybe they are, but I haven't come across them.
Wow.
And so a lot of times I think, a startup thinks, I've got to adhere to this AML, probably if you asked half the startups what does AML even stand for, they wouldn't be able to tell you.
Oh dear. It's been worrying in itself?
No, well, I mean, I'm sure that's your experience. That's certainly been my experience.
Yeah.
And so I think that's where the regulator play. It's very simple. When we went to the MAS, the simplest thing that the MAS did was they created the looking glass. Now, if you go to the MAS in Singapore, it's the most boring central bank building in the world, I'm pretty sure. The Saab has a really kind of funky looking, smart black. It says what's on the tin. It's there, it's nice and smart. The MAS building, to be fair to them, it's a very, very old-fashioned, boring building. But you go up to, I think it's the 11th floor, and you come out, and there's this space which is just amazing. It's a fintech space. And all they did was they created a space, which, yes, costs a little bit of money, but in the grand scheme of things, it was a very small thing for them to do. They set it up, and then they just have now a space they can invite people, come in. And suddenly this engagement starts. So it's the regulators, they have the banking association on the next floor up, so suddenly there's a bit of synergy happening, and they've brought in the academics as well. So they've created the space, they don't have to change a single rule, and yet they start engaging and helping kind of this, exactly what you said, this cross-communication and ideas, pollinating ideas backwards and forwards.
Okay, thank you for that. I have one last question for the panel, and then I'm going to open up for a few questions from the audience, so do have your questions ready. So we've talked about sandboxes, we've obviously talked about looking at the gaps within the laws and maybe new laws, and then the role of the regulator in sort of information and sort of knowledge gathering and exchange. Is there anything else that you think that regulators should do or can do? So, other avenues that they should be involved in that you'd like to express?
I can share other ways Ghana is doing it, but I said already, it doesn't mean it's applicable to Seychelles. They can. My governor meets with all fintechs. We encourage them to set up an association, what they call the Tech Chamber. We meet regularly, and then the governor asks them to tell him their problems. In the first place, he asked them to write a paper to tell him the various classes of fintechs we have, their operations. He wants to understand. So the earlier submission by my colleague panelists saying that regulators are somewhere and then the innovators are innovating, things are changing. Central banks are no more laying back, because as a governor, you cannot lay back. You must know what is happening in your financial market. So one way of promoting or facilitating the growth of fintech is for the central bank to get closer to them. You can encourage them to form an association. It becomes an umbrella body. It can be a platform to engage with the central bank. Then it helps in the development of the ecosystem. But in the case of Seychelles, there are only 95,000 people in the country. It could be a different framework, but the department responsible for promotion of fintech can come up with something. They get closer to the fintech and understand them. It could be that they may not even need sandboxes. They may have their own name, and a different country will come and learn from. So that is the advice I always say, that don't look at what other countries are doing. It could be green bosses, and it will be developed by Seychelles, unique to Seychelles. So that is the advice I will give.
Good advice. Anyone else?
Yeah, to add on to the engagement, it's important. Some regulators are very close. Some regulators take the position, I'll tell you when I want to hear about something. Till then, thanks, but we'll call you when we need you. Others, we're a very open regulator. We want to know what's going on in the marketplace so we can plan. And one of the things that we're looking at doing, and we're still in the early stages, is creating an innovation advisory panel. This would be industry participants that would be a panel to advise us. We would like to know what's coming down the road 6 months, 12 months. What are the real innovations? Right now we get it very ad hoc as a fintech comes to us. The latest thing right now is this particular distributed ledger. It's Corda, it's blockchains, whatever it is, but we get it on a very ad hoc basis. It'd be much more helpful for us in policy making, rule making, if we had a consolidated body that would talk to us across the industry, what's happening and what do we need to be looking forward to. I say it's different levels. We're very open to that. I think a lot of the regulators need to open the door a little bit wider to that kind of advisory.
I think we must spend more time as regulators, authorities, exploring what we can do from a fintech perspective regionally. I don't think we're doing enough about that, including what we could do bilaterally. There's some really great examples of bilateral engagements between central banks in particular that have demonstrated successes, and I think we must explore that in greater depth.
Do you want to tell us a little bit, sorry, about what the SADC are doing as a region?
Yes, I think for a long time, one of the major initiatives was putting together a regional RTGS. But I think it's now stable, it's been running for a number of years. We've got to start now thinking about the retail segment and how we integrate. So there's a lot of work that needs to happen there. I think a fintech working group has just been put together, terms of reference is being crafted, etc. I would plead that unlike what we did for the RTGS integration way back when, we need to move with speed. In other words, we must not be afraid of making mistakes.
It's a hard one for a regulator, isn't it? But I remember from the time before. But yes, you're absolutely right. Peter?
So I think we speak about the regulator, but that's a fallacy. There are multiple regulators. The central banks regulate a certain aspect of the law. The Financial Intelligence Center or the people involved in AML, CFT regulate a different part of the law. And I think one of the things that any kind of fintech unit could do is just to help guide or help be a portal into the various different regulators. And they're different people, they're different organizations, and one of the great things with Intergovernmental Financial Working Group, it's a mouthful, is that at least you now have the majority of the regulators in place. I mean, there's the tax regulator as well. And just to help point startups or people with ideas to say, listen, this is covered by this particular regulation or this regulation. And maybe this is a new thing which crosses a bunch of things which we haven't thought about before. But I think generally you'll find that it's reasonably well catered for. It's just people don't know that. So, people have come to me and spoken about the regulator, and I've said, which particular regulator are you referring to? And often they have no idea that there's, it's somehow just this one thing out there in the cloud.
And often it's quite confusing whether you go to sort of the technology regulator or the sort of the ICT areas or the finance regulators, especially because there's so many overlapping areas. Alan, did you want to come in?
So I think on the other side of what Peter was talking about, I think it's also important for regulators to talk to each other domestically. I mean, I know Arif was mentioning regionally, but I think more importantly, before we go regionally, at least we should be talking in the same language domestically, so that we have a coherent approach to this fintech issue that is at hand.
Absolutely. Sorry.
Can I make a quick comment?
Yeah.
So I think that's such a great point being made by Alain, and Peter. So one of the things we're thinking about doing in South Africa is to organize this thing that we call a one-stop shop. So as an innovator, whether you're an incumbent or a fintech firm, you could come to this one-stop shop, pitch your innovation, and you would be guided irrespective of what the underlying function is: credit, payments, insurance, investments, etc.
So guided to the right regulator.
To guide you to the right regulator.
That's great.
But at the back, have a coherent approach.
Yep.
I mean, once they, I mean, the business idea comes to the regulator. I mean, there is a coherent approach, so that there is no inconsistencies. One regulator pulling one way and another pulling another.
Great. So looking at the audience now, are there any questions that you'd like our panelists to answer?
Oh. Many questions.
I think there's a mic just coming to you, if that helps.
I was about to say it's time for Seychelles Got Talent. So I think it has something to do with the...
It's called SIRIS, right? The SIRIS.
Yes.
Yeah, that's this. Right.
RTGS,
Right,
yes.
okay. I didn't know that.
Yes, I won't go into the detail of it, but I think it has something to do with legalities and trademarks. But I'll leave it at that. Yeah. By the committee.
So for those who can't hear, the question was more about how has the SARB actually worked, particularly with fintech players in the ecosystem. And the question before that was much more about interoperability and the use of the RTGS.
If I may, I think
there's a session.
There's a session tomorrow, and I'm going to cover it in great detail, Franz. Here.
So Arif is going to do a presentation on the whole of the project COCA and how it actually worked, and that's scheduled in for tomorrow. I think there was another question in the audience there. The lady at the back.
Okay, so when I came to this session, I had a couple of questions, but I think that you answered most of the questions. And the gentleman from Ghana, you are definitely my friend. I think we go to the same school. So maybe I will give a comment, and after that a question for Peter. What we did in Morocco is that we are not going on Sandbox because we think that it's Pandora's box, and maybe it's very expensive for us and not very adapted to our context. The test and learn approach, maybe we are too conservative to have such an approach. So what we did is creating a one-stop shop fintech in the central bank. So, Peter, my question will be, if you came to Morocco as a fintech, and what I will do is I will explain all the regulatory framework that we have, and I will try to understand what you are offering. But what am I asking is, if you didn't fit with the regulatory framework that we have, what are you expecting from the Central Bank of Morocco to do?
So I would expect, so one that we would be able to engage and say, this is the idea, this is what we'd like to do. You've now explained the regulation, we see that there's a gap, there's something missing. The question then is, then we need to have a look at, is there a need for whatever reason? Is it financial inclusion, a new business model, something around that? Is there a way that we could change the regulation? Now, all regulation changes all the time. So that's my perspective. 100 years ago, we had very different regulation to what we have today. And so there may be cases where we could help engage. And we understand that that is a slow process. But one I think is brilliant. We have a one-stop shop in Morocco. We land, we can immediately start engaging. That's great. 2, if there's a business proposal that doesn't fit, I would expect that at least there's some way that we could start influencing some change in the regulation. That would make sense. Obviously, if you say we'll never do this because it's too risky, then we know, that this idea would never fly in Morocco. But I think it was Ken who said it yesterday. Someone said it yesterday that once the regulation is defined, it's actually relatively easy to work around that. It's where there's no regulation defined that it's very difficult. It's very difficult to code out a solution when there's no definition or a lack of understanding of any definition that there is. So I think the most important thing is that the regulators are clear on what they do. And for me, there's 2 levels of that. There's the policy level. So these are our red lines in terms of policy. We will not allow Morocco to become a center for money laundering. That's a clear policy directive. We will not allow, for example, liquidity levels to drop below certain levels. That's a clear policy directive. So you know that within that framework, you need to work. Then there'll be very specific rules. So there are some rules that, for example, say there's a policy that says settlement has to happen in central bank money. in the South African Financial Act, it actually specifies in the domestic context that settlement, the settlement finality is defined when SAMOS, which is the name of the system, defines that the settlement has taken place. Now that, for me, is problematic, because what if there was another system that was still central bank money that we could still have settlement finality on? So in terms of policy and PFMI's principles for financial market infrastructure, we're still adhering to the policy, but now the system's called something else. So that would be something I would like to engage the regulator on and say, let's remove the word SAMOS and replace it with a real-time gross settlement system, for example. So that, you know, I hope I'm answering the question, but I would think that the regulator would be at least open to saying this is a great idea if we were to change this. So, for example, KYC in Kenya and Tanzania used to be you had to go in face-to-face, a visible check to see that you are who you say you are. Nowadays, you're allowed to take a photo and submit that. And the same in many jurisdictions in South Africa. We have the similar thing where you don't require face-to-face KYC anymore because the systems have changed. The way you can verify that someone is who they are has changed. I recently had to do a KYC process where you had to prove that you were, and I think they wanted to prove that you were a living person and not just holding up a picture, because it said, you know, wave your left hand, and then you had to wave your left hand, and wave your right hand, and nod your head, and turn around, and stick out your tongue. There were a whole lot of things you had to do to prove that you were responding to the prompts, which I suppose is a technologically clever way of the old go into the branch and prove that you are who you are. So that's definitely changed, and those would be the kind of things which I would think would be able to be changed in the regulatory space.
Thank you very much for that, Peter. Very, very specific. I like that. I think we have time for one last question here at the front.
It's a request.
Oh, okay. We'll see if the panelists can accommodate that.
Thank you. It's not a question, it's a request. It's interesting hearing what you're doing, because ultimately it's one of the things that needs to be solved, and it's nice to see the spectrum of approaches. The one thing that I've always been missing in the room who are not on stage, just don't waste each other's time. It's okay to say no. But the problem that we have with startups is they come into the system, and because you guys are trying to figure this out, that's been dragged on and on and on and on. Have a coherent approach between the regulators in one country, right? So this is very short. Just be respectful.
It's kind of like the MAS's Sandbox Express that they've called it, where they're willing to give sort of decisions in a couple of days, I think. Okay. Yes. Go ahead, yeah. So I'm going to turn to the panel and say last comments, and so we'll just go down the road and if down the thing, and if we maybe just really quickly and tweet length, as my colleague said yesterday, lessons learned. I mean, if there's anything you're going to do differently. So Arif, we'll start with you because I think you were about to say something.
I'm just going to respond quickly. Sorry. I think that's a great comment as well. One of the things we're trying really hard to do is stay humble and engage with incubators, and to be bold and say no when the answer is no. My tagline would be, I often share it, is don't put your head in the sand, put it in the sandbox.
Just a comment to the lady from Morocco. It's a very good point with the sandbox. You don't need a sandbox to support innovation. And just to give you an idea of the way our sandbox is, a savvy fintech could have come to us 10 years ago who had the resources to read our rule books and the understanding. They could have proposed to us the exact structure that we've put around our sandbox. They could have said, we need these waivers, we need these modifications from your rules to operate. In exchange, we'll only do this amount of business. We could have accommodated that. We have a committee structure that could have reviewed that. We've just streamlined the process. We did the heavy lifting and came up with all of the waivers, modifications we think they would need. We standardized it and packaged it up, and we marketed it as a sandbox. So sandbox isn't, and it depends what your objectives are. Some jurisdictions it is a bit different, but they're largely a marketing tool. If you need that to get attention to an innovation program you have, then you call it a sandbox and you can promote it that way. But in our case, you don't need it. We didn't really need it. It was just a way to make it clear how we can accommodate certain levels of innovation. The big lesson learned from that one, I didn't mention earlier, they're resource intensive too. When you create this program, when you make the invitation, you create a sandbox, you tell the world we're doing this, they come to you, you will likely get a lot of attention. It takes a lot of resource. And to Nectarios' point, a lot of that resource is spending a lot of time, and sometimes it doesn't really go anywhere, and in the end, you do end up both looking at each other thinking, thanks for wasting my time. After 6 months of discussions that really lead nowhere.
Thank you.
Yeah, I think another recommendation I will make is that for the Central Bank of Seychelles, whatever regulation you are coming out with, engage the industry. The fintech, they have very brilliant ideas. The closer you are to them, you get a lot of learning points to move your economy forward. So I would advise that with all the lessons we have learned also, there's no standardized solution for any country. You must come up with your own solution.
Absolutely, great advice. Alan, any concluding comment?
Yeah, I just want to echo what my colleague from Ghana says. And I think yesterday, Mr. Bonlam, I think, voiced quite clearly, I mean, some of the difficulties that the business side faces with regulators not being transparent or not engaging them enough. I think this is very, very important for us going forward as a country, as we are thrashing about coming out with a policy and coming out with rules and regulations. I think this is very important, and I think echoing from what my colleague from Ghana also said, I think we have to be cognizant that we have to come up with what works best for Seychelles. We have consultants coming from overseas, pushing ideas, but we have to sometimes take pause and see clearly what works really well for Seychelles.
Thank you.
Final comment, the ATM was not the last innovation to have happened in payments. Credit cards were not the last innovation. WeChat payments are not going to be the last innovation. There are going to be more. There will be winners and there will be losers. We see how many branches around the world are closing down, and that started when the first ATM, so I can only imagine as a bank teller in those days, seeing a machine starting to do part of my job would have been scary. And I think we have to have a robust understanding of there are going to be new innovations, there are going to be new ways of doing payments, there are going to be new ways of doing investments, new ways of doing insurance. It's going to have an impact on the old world. People are going to lose their jobs. Other people are going to get new jobs. Somehow we're going to have to both regulate and innovate in this space. We're going to have to do it with clear heads, lots of communication. And there will be many, many new things coming out in the future.
Thank you very much. I think we've barely scratched the surface, but I think there's a lot you've given us to digest. And so the key takeaway, I think, is also to interact a lot more with the industry and to find a solution or to find something that actually works for you. So to be quite bespoke in the approach that we take to FinTech. So thank you to all my panelists, and thank you to the audience for being a great audience. And yes, to the next session. Thank you. Thank you. Thanks, Sita. Great comment. Oh, God, yeah.
Thank you, Shamista and the panelists, for your very interesting deliberations. Ladies and gentlemen, the next item on our agenda is the official opening of the FinTech exhibition by the Central Bank of Seychelles Governor, Ms. Carolina Bell. I have the pleasure to invite you to follow my colleagues, Ms. Pauline Moustache and Mrs. Audrey Shetty, to the glass house for the event, following which coffee will be served in the grounds of the exhibition hall.